We would like to present to you a possible future that has the capacity to completely transform an industry. Imagine a Tesla, unrestricted by the constraints of the open market. Tesla that functions with the stealth and agility of a private company with his audacious prediction. Ross Gerber, name famous with financial acumen in the EV industry, has ignited a wildfire of speculation in less than 2 years. Tesla may become private. Today's episode will explore this fascinating possibility. What does this mean for Tesla, Elon Musk, and you as an investor? We'll analyze the ramifications, the difficulties, and the possible course of this. We'll cover every perspective of this monumental transition from boardrooms to trading floors, sleek Tesla interiors to busy factory floors. So grab a seat and get started. And the subscribe button, this is news about Tesla shares and the tale of the company's possible sale to private equity. It starts right now. In the world of electric vehicles, Tesla is a titan. Teeter's about to make a stunning move away from open markets. Effective financial management. Ross Gerber interprets the clues that point to a bright private future for this industry titan. This move has the potential to rock Wall Street to its core. Consider it. Tesla is associated with innovation and industry leadership in the electric vehicle space, but consider the significance of their rise from only 100,000 vehicles to an astounding over 2 million. This is a business that is expanding at a breakneck rate. It's all about pace, don't think. Also, at $200, is Tesla a wise investment? Explore this question with us. Former Tesla board member Steve Wesley is upbeat about the company's prospect in the long run. His confidence stems from Tesla's proven track record of innovation and market disruption, especially in the electric car industry, even in the face of a weak third quarter that frequently causes investors and analysts to become concerned. Wesley remains unwaveringly enthusiastic despite Tesla reporting a slowdown in production and delivery during the third quarter. This was a calculated strategic move rather than a case of underperformance. Tesla publicly announced that it would be temporarily slowing down operations. The company did this in order to introduce a significant facelift to its popular Model 3 vehicle and to implement efficiency upgrades throughout all of its production facilities. These upgrades are especially important in the rapidly evolving EV market, where maintaining a competitive edge requires constant innovation in both product design and production processes by improving manufacturing efficiency. Tesla wants to lower costs, speed up manufacturing, and enhance overall product quality, factors that are essential for the automotive industry's long-term survival. One of Tesla's main dedicated to the business is to ongoing improvement because it is more reasonably priced than Tesla's previous models. The Model 3 has been a major factor in the company's sales growth, appealing to a wide range of consumers. Upgrading this car probably intends to increase its appeal even more by taking customer input into account and implementing modern technologies. Wesley's optimistic assessment: Tesla is bolstered by its track record of surmounting obstacles and emerging stronger, whether navigating production constraints, supply chain problems, or regulatory obstacles. Tesla has continuously shown resilience and adaptation. This adaptability, along with a clear vision for the future of transportation, puts Tesla favorably for long-term growth that is predicted. A resurgence in Q4 is something to keep an eye on, but hold on for more. Ross Gerber's shocking prediction: within 2 years, Tesla will go private. A step that might rewrite the wall. The scene is prepared for a comprehensive discussion regarding Tesla, looking at their most recent earnings, margin worries, and many more people. Joining us are Steve Wesley of the Wesley Group and Herbert M. Davison of Gerber Kawasaki Wealth Agent Investment Management. Starting off straight, let us ask our viewers, is Tesla a good investment at $200? MDB expresses confidence in Tesla's long-term trend, despite the company's current difficulties with the Cybertruck. With Tesla's enormous desire to revolutionize the automotive industry, this is a great time to create or strengthen your stake in the company, especially when the stock is declining. The Cybertruck has attracted a lot of attention due to its futuristic appearance and high performance claims, but it has also encountered several obstacles. These difficulties range from production holdups to worries over the market's acceptance of its unique design in spite of these problems. HMD optimism draws attention to a critical component of Tesla's strategy: its readiness to push limits and rewrite automotive standards. Tesla's ambition to revolutionized the automotive industry is indeed unprecedented. The company has consistently strived to disrupt the status quo, whether through its focus on electric vehicles, its approach to software updates and autonomous driving features, or its exploration of renewable energy integration. Relentless pursuit of innovation has not only set Tesla apart from traditional automakers, but has also established it as a leader in the train transition to sustainable transportation. In light of this, HMD suggests that moments when Tesla's stock dips could present strategic opportunities for investor stock market fluctuations, especially for a company as dynamic and closely watched as Tesla. Are not uncommon. These dips can sometimes reflect short-term market reactions to specific challenges or broader economic conditions, and a fundamental weakness in the company's long-term prospects. For investors who believe in Tesla's vision and its ability to execute that vision, dips in the stock price may offer a more accessible entry point or an opportunity to strengthen their position in the company. This perspective is especially pertinent for those who adopt a long-term investment approach, focusing on the company's potential to grow and dominate in a future where electric vehicles and sustainable energy are increasingly. Now that we're focusing on the most recent report, it appears to have raised some concerns. Elon Musk, who is typically a figure of unwavering enthusiasm, seemed tired and disheartened, especially given the difficulties surrounding the Cybertruck. Could this be an indication of larger struggles within Tesla, or perhaps a distraction from other problems like Musk's involvement with Twitter? In 2018, a tweet from Tesla's visionary CEO, Elon Musk, changed the financial world. The announcement of the proposal to take Tesla private at a price of $420 per share set up a frenzy of speculative activity and rigorous regulatory scrutiny. Although the concept ultimately burned out, many continued to speculate about its potential. Now that the question of whether Tesla is about to make a radical change that would completely change the way its business operates, it is important to keep an eye on this developing story. Imagine the implications of a change that could completely change Tesla's future and release it from the relentless pressures of the stock market. Tesla might also be able to make decisions with incredible agility. Strong advocate of Tesla, Ross Gerber, thinks that the company could be protected from short-term market swings and the ongoing pressure to meet quarterly targets by privatization. This viewpoint is founded on a number of important factors regarding the characteristics of public markets and Tesla's distinct place within them. First, public companies are naturally vulnerable to the whims and fluctuations of the stock market. These fluctuations can be influenced by a wide range of factors, such as investor sentiments and broader economic trends. They also frequently reflect short-term thinking, which can be especially dangerous for a company like Tesla, which is at the forefront of technological innovation and sustainable energy. Historically, news, rumors, and investor mood have caused large fluctuations in Tesla's stock price that are not usually indicative of the company's real performance or long-term prospects. According to Gerber, Tesla may shield itself from the short-term market dynamics by turning private and avoiding the media's and public market investors' continual scrutiny. Instead of being unduly influenced or sidetracked by changes in stock price, Tesla might concentrate more on its long-term strategic objectives, which include increasing production, improving technology, and growing its market presence. Furthermore, publicly traded companies are required to disclose their financial performance in a very transparent manner. As a result, shareholders, analysts, and the media frequently closely monitor these reports, which can lead to an emphasis on short-term results rather than long-term strategic planning for innovative companies like Tesla, which is continuously investing in R&D, expanding infrastructure, and exploring new market opportunities. It can be difficult to demonstrate regular quarterly growth, and it might not always be in line with its long-term innovation goals. According to Gerber, Tesla could operate under a private structure where there would be less of a focus on meeting quarterly targets. This would allow the business to allocate resources and make decisions that may not have an immediate financial impact, but are essential for sustaining long-term growth and keeping its competitive edge. Going private might allow Tesla to avoid the scrutiny that publicly listed firms usually face from investors and analysts who follow every move the company makes. However, there are also other benefits that could result from going private, such as the potential to change the value of Tesla shares and help investors. Tesla can now concentrate on long-term strategic objectives and innovations thanks to privatization. Liberated from the erratic swings of the short-term stock market, it research and development. Furthermore, as a private company, Tesla could make quicker strategic decisions with a higher level of secrecy, which would give it a significant competitive advantage in the cutthroat EV market. Publicly traded companies frequently face pressure from activist investors seeking changes that may not be consistent with the company's long-term goals. Furthermore, Tesla wouldn't have to constantly please public investors by securing sizable funds for expansion and innovation from institutions or private investors. Let's now examine the possible long-term effects of becoming private on Tesla's shares. By shielding its stock from speculative trading and short-term market fluctuations, Tesla would be able to focus on long-term strategies free from the disruption of daily price fluctuations. Privatization would also benefit Elon Musk and the Tesla leadership, greater flexibility and independence in decision-making. This autonomy could allow for the making of strategic decisions independent of the market's immediate reactions. The possible move by Tesla to become private might be a game changer, enabling concentrated long-term growth, easing market pressure, and improving its strategic freedom. As a source of inventiveness, Tesla must make the crucial choice of staying publicly traded or entering the private sector as a private owner. Tesla might be freed from the constant strain of short-term performance measurements if it were to transition away from the strict quarterly reporting requirements that public businesses must comply with, opening the door for a more long-term visionary strategy while Tesla is public. Status certainly increases its visibility to investors and attracts a lot of attention from financial analysts. Privatization promises a more seamless execution of its strategic initiatives and groundbreaking innovations. It may also protect the company from moreover, and a decrease in regulatory and compliance requirements may result in cost savings and a more efficient business, which would ultimately benefit the shareholders. Market rumors and conjecture are known to influence stock prices, often called the world's most heavily shorted company. Tesla is engaged in a relentless struggle. The company is seen as a bubble ready to burst by critics who think its valuation is too high. Some even foresee a catastrophic collapse to nothing. The constant pressure from short sellers creates an uneasy environment for Tesla, making the case for privatization more and more appealing. The road to privatization is not without its challenges, but with Tesla unhindered by public market scrutiny, unrelentingly pushing forward with its bold projects from transforming electric vehicles to conquering space, it would be possible to raise a sizable amount of money through the sale. These funds would then be directed towards further research, development, and expansion of Tesla's visionary ideas. The difficulties in planning a buyout and overseeing a seamless transition. Furthermore, Tesla must make sure that all shareholders are treated fairly while resolutely pursuing its goal of bringing about the global switch to sustainable energy. Going private appears to have more benefits than drawbacks. So if Tesla can make this transition smoothly, it could mark a turning point in the company's history. But as of right now, the idea of privatization is still speculative. However, given Elon Musk's propensity for unconventional thinking, the idea could very well resurface in the dynamic landscape of Tesla and the EV industry. And with that, we come to the end of today's video. Now, we turn to you, our value viewers. What are your thoughts on Tesla's future? Do you think privatization is the key to realizing the company's full potential? How do you